Good evening. It's Saturday, September 23rd. My name is Dave Coker, and this is Talking About Finance. And okay, here we go. Another wonderful evening with the bestest guys and gals who are passionate about building wealth. The simple way, the easy way, the slow way, yes, but an almost certain way. We reject all the rubbish notions about trading or systems or having an edge. Inside knowledge, if you will. We recognize all these systems do is transfer money from the customer to the fake guru, the false prophet, who's almost always more interested in upselling than delivering on their promises. So we only buy assets that pay us to own them. Anything that generates income is of interest to us. It is fair game. We buy regularly. We buy often. We reinvest all cash flow into more assets that pay us to own them. It's the power of compounding, but working for us. And this is the only certain way to achieve financial independence. Look, guys, I'm not the brightest bulb in the pack. If it worked for me, it can work for you. It took me about 20 years of investing to achieve financial independence, but you can do it quicker because I was making all the mistakes. All the errors you're not going to make. But look at it this way. You're going to go forward and you're going to make new and interesting mistakes. Your own mistakes. But as long as you keep an open mind and learn all the time, you'll do well. But you're here and we're here to talk about finance. So let's go. Odd but not an unexpected week if you've been listening to this channel for a while. The S&P 500 closed down about 2.93%. And curiously, this is one for the record books. Every sector was down on the week. 7 sectors outperformed the S&P 500, but that means they lost less money than the broad index. And 4 sectors booked losses, big losses on the week, with consumer discretionary getting absolutely killed. Down 6.35%. Remember, consumer discretionary, companies that operate in that sector provide products and services that people do not need. Those fall into consumer staples, which was only down 1.78% on the week. Consumer discretionary, think luxury, stuff people don't need to live, and those stocks got hammered. So remember, as bad as September can be, and usually it's a down month statistically, October is what we got to watch out for. And my advice is to sit tight, build up cash. Remember, guys, I've mentioned this for a few weeks now, a few months actually. I've advised you to do it. Something is going to happen. And it wasn't last week's drop, waiting for October. I'm not saying we're going to have a 1987 style crash. That was a beautiful day. I remember I was in the market that day, down 22% in one day. Oh my God. And then over the next month or so, it grinded down another 12% or so. It ended up 34% down from the peak. And then it traded sideways for about 2 years. Not saying that's going to happen, but be prepared. That is essentially the worst case. If you're only holding dividend-paying assets, if you're holding cash going into any type of correction or, heaven forbid, a crash, you'll be able to get, as I always say, the stocks you like at the prices you'll love. The VIX traded up to 17.20. It opened the week at 12.91. The 10-year note closed the week at 4.43%. It's up 0.1% on the week, and it's up 0.6% year to date. Oil closed the week at 90.34, down about 0.5% or 50 basis points on the week, still up about 12.6% year to date. And both the Saudis and the Russians are committed to output cuts. Mr. Biden is not happy. And yes, if this persists, we're going to see U.S. inflation headed higher. So pay attention. That'll have an impact on Fed policy and future rate hikes, or as they're calling it, a hawkish pause. And since yesterday was Friday, yes, of course I bought Bitcoin. What else am I going to do at 400 hours in the morning? I wake up, I buy Bitcoin, I look at the markets. I want to see how Asia's trading. I get ready for the European Open, and I get ready for the New York Open as trading in Europe progresses. So hopefully you're dollar costing Bitcoin as well. Remember, I've been buying it every week since 2014. You need to buy, and you need to buy regularly. The halving approaches. We're not quite sure of the date, May, towards the end of the month of 2024. And you need to be well positioned for the halving. So let's find out what me and my buddies, some 50 or so finance professionals from all around the planet, talked about all last week. And guys, oh my gosh, where have my manners gone? I need to properly introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone, absolutely everyone in global finance. Almost anybody in global finance is just a connection, maybe two away. We've been playing that game on the Telegram group for quite a while. Yeah, we can name a name, and we're about 2 clicks away. And this week we're reporting from Wall Street, the city of London, Shanghai, Mumbai, and Sao Paulo. We have people absolutely everywhere, anywhere that matters. So let's go. 7 slides for 7 days. And I really have to thank you for letting me do this. You guys are the best. So here's one thing to keep in mind. Sometimes people ask me about the difficulties that stocks are facing now. And why are they going down? Well, stocks are competing with risk-free assets, specifically U.S. Treasuries. And right now I punched up here 3-month and 6-month T-bills. It's from a research piece that I've written over the past week. You can look at the yields on 3-month and 6-month T-bills, 5.56 and 5.52 respectively. Even the 1-year T-bill is yielding 5.42. So given these awesome yields, guys, how can stocks compete? We've got such a strange issue going on right now. Oh, that date's wrong. I just noticed it. It's not 2009 to 2016. It's the last 3 months. But we have a lot of headwinds facing stocks right now. So that's why Treasuries are so darn attractive at this point. Remember, they're risk-free assets. You're going to get this return over a 3-month or a 6-month period. It's going to be annualized, of course. So you're not going to get exactly 5.56 for 3 months or 5.52 for 6 months, but it doesn't matter. It's a guaranteed yield. Compare it to stocks, and you'll see what the issue is. And yeah, I do track, as you know, I do track fund flows, and it seems a lot of retail money are unloading stocks at the worst possible time. I have no idea if it's a trading strategy or if they're just getting emotional, although I suspect they're just getting emotional. And that's why I've mentioned to you guys, I never trade, I never take a position unless I model both the entry point and the exit points, there's 2 of them, in a spreadsheet. You just don't do it. What are you going to use? Your intuition? Yeah, I think it's gone up enough, or it fell, but I think it's going to come back. That's rubbish. You're going to go broke trying to trade like that. So do everything in a spreadsheet. And yeah, retail investors, not quite sure why they're dumping stocks. It's the worst possible time to be doing that stuff. It all gets down to this. And yeah, I've seen this before at the universities I work at. Academics, doctorates, yep, advanced degrees, and still they can't even manage their own personal matters in terms of finance, let alone invest and make money. Well, that's okay, because at least in the UK they get a pretty decent academic pension, and if you get the state pension, yeah, I guess you'll be all right. You can have beans on toast 5 nights a week if you want to do that. I don't know, but yeah, don't pay too much attention to what the hardcore academics, especially in sciences like economics, have to say about the markets. Remember, economics is called the dismal science, and it's called the dismal science for a reason. I have never once met, I should say, an economist who has as much, let alone more, money than me. And this includes some people you see on TV all the time. I'm not going to name drop, but it's absolutely ridiculous. So don't listen to them. And this weekend is going to be really interesting for one reason. A lot of people haven't saved much money, and I know this is hitting the baby boomers really hard now. And keep in mind, guys, about 10,000 baby boomers retire every day. And unfortunately, we know that their financial positions are not too well. And I'm not really joking about this. Their fate is sealed, but yours isn't. You can invest now, build up a nice cash cushion, hopefully build up some adequate cash flow, and then you don't have to live off your savings. You live off your cash flow. It's exactly what you want to do. Oh, and this is really wild. I noticed this. I just happened to look on Amazon, and this is really interesting because they've got the Barbie movie, and keep in mind it only came out 2 months ago. And our cinema, our local cinema, well, there's a few of them, but we can get in for £4.99 if we want to see it. Look at this. They're actually renting it now for £15.99. Now, there is an interesting message there. You might think, unless you got a family of 4, it doesn't make any sense. Well, anyone who's been to the cinema knows you take 2 people, you're already talking 10 quid, and then you got to get some popcorn, you got to get some water, and that crap ain't cheap. They gouge, and they know they gouge. Why do you think they insist upon searching your bags when you go in? Because they know they're gouging you. They want you to buy their overpriced tosh, crap, whatever you want to call it. I think this is really fascinating, though. And I can see people getting together with friends, each of their friends kicking in maybe 2 pounds, 3 pounds, bringing a bottle, bringing a dish, making a party out of it. Yeah, why not? I want to see the movie. I don't believe the garbage. They say it's an anti-man movie. Here's the thing, guys. Sigmund Freud said, and he was an inveterate cigar smoker, and somebody said it was a real phallic type of fantasy he had, smoking cigars. And he answered the individual and said, sometimes a cigar is just a cigar. Sometimes a movie is just a movie. There's no deeper meaning. If people are looking for deeper meaning, they really got to get into the markets where they can build some wealth instead of writing garbage about the deeper meaning in these movies. There's no deeper meaning. It's a silly movie. I want to see it. And guys, one thing we know about Bitcoin is we know there's a lot of institutional money just sitting out there waiting. Now, FASB gave us a gift, and if you go on my blog, Fintech Flash News, I have written about this. FASB gave us a gift about 2 weeks ago. In 2025, they're standardizing or they're expanding the accounting treatment to allow companies to add Bitcoin to their balance sheets. Cool. And they can market to market so they can recognize losses or recognize gains. Right now, they can't do it when they add Bitcoin to their balance sheet. I did write an article looking at all the companies that have Bitcoin on their balance sheet. And MicroStrategy, if you're familiar with Saylor and his statements on it and his company, MicroStrategy is not the only one. There's about 20 companies right now in the S&P 500 that are holding Bitcoins. I'm not saying meaningful amounts, but that number is going to explode as the FASB accounting treatment gets adopted. And once again, Plan 9, what an awesome guy. I follow him on Twitter. I look at his work all the time. I believe in his work. Now, this is from his stock to flow model. And anyone looking at this will recognize the halvings. We know that there's always a gap, a price spike up, and it's recognized by the green dots. Right after a halving, there's a spike up in price. We had the last halving in 2020. Look at the spike up in price. And then we see it tends to trade sideways for a while. It goes into a bear market, and then it goes, and that's the yellow phase, and then it goes into the red phase, which is liquidation, where the weaker hands dump their Bitcoin. Why are people so stupid? Oh yeah, and what follows the liquidation phase is the accumulation phase, which we're in now. Why are some people so stupid to sell their Bitcoin? Guys, I've never sold any Bitcoin. As I mentioned to you, I've been buying it for years. I've done 4 small trades, nothing meaningful, just to make sure that if I wanted to pull the trigger, I could dump some Bitcoin and buy a house. I have a property business. Wouldn't mind getting another house. Yeah, but regardless, just buy it and hold it. Don't get impatient and say, oh, this is going down, I'm going to sell, because Bitcoin will spike up in price. It's inevitable. And you can't time the market. Don't even try. Just buy and hold. It's the best advice I can give you. I buy Bitcoin every Friday in the morning. I've been doing it for years. Whether you buy Bitcoin once a week, once a month, once a quarter, How often you buy it, just buy it. And guys, I'm not buying one Bitcoin every Friday. Sometimes people misconstrue it and you're full of garbage. You're not buying a Bitcoin every week. No, I never said. Keep in mind, one Bitcoin is divisible into 100 million sats, or satoshis, as they're called. You can buy as many sats as you want. You want 1,000? You want 2,000? You want 10,000? You want 100,000? It's up to you. Fractional ownership of Bitcoin is a thing. It's designed into the cryptocurrency. So I buy some sats every Friday morning. I stack those sats. They go into my offline wallet, my hardware wallet, and that's it. They're never coming back to the internet, to any exchange. I fully intend to hold on to them for as long as I can. Bitcoin's awesome. Get some exposure to Bitcoin. Okay, guys, that's it for this evening. You're going to have a wonderful week. It's going to be a very profitable week. Just make sure you pay attention to what's going on in the markets. You don't get emotional. And best of all, you invest. You need to invest. Take care, guys.